Next on the agenda is Joel Stewart, our CPA. Jason and Joel.
Yeah, so Joel Stewart is here. Obviously you guys have met Joel before. Joel is our new CPA, after leaving, Newberry Street and Associates. So I'm gonna pass out these to the board members. I don't know how many we have, but
We can share if you want.
may have to.
That's
I'll turn it over to Joel. Joel and I've had a conversation, he's kind of brought us up to speed, but he's gonna kind of review our financials with us, and then, he's gonna discuss the potential, transactions of real estate, from different holding companies. So I'll turn it over to Joel.
So in your packet, there's three different sets of financials. One, the first one you'll see is as of June 30 for Aiken Corp as a whole. That will be what is represented on the tax return for this year. That's kind of where we live. Then the second will be, that's the current financials up through the October end date. And then the third piece is the LED S Corp financials through, and keep in mind, they're on a calendar year basis where Aiken Corp as a whole is a fiscal year, so we've got a little bit of a time lapse in there, but the net income for LED through the end of October, assuming a couple slight estimates in there, but that's kind of where we're looking at. As I've been going through and getting my head around this and kind of cleaning up, I've asked questions I think that were sort of not asked in a long time, and there were things that were just kind of hanging out that just kind of were missed. So there's different things that we've got options on as far as the tax return for bringing taxable income down in this current year from LED. Now keep in mind that what we've done already as far as the 23 tax return for Aiken Corp is already baked in the cake, but we can do the tax return that I'm gonna do for LED, we can make some cleanup there. Long and short of it, one of the bigger things is there's a note payable from URS that was done years prior to help them upfit the building at one point, and part of their rent that they were paying, they increased that rent payment to pay off that note. Well, none of those extra payments were ever applied to that note, and they were always just booked as rent income. So at this point, we've paid tax on money that should have been paid off, loan payoff. And at this point, that note, from what we can tell, should be at zero. And so we have the option of going back and amending several years of tax returns, or just going ahead and saying that loan is done as of this year and decreasing the rent, by 60 some odd thousand. And that's probably the way I would go, just simply that you pay tax prior on it, and now it's we could just call the loan payments, the rent payments for this year is to satisfy that note. And that gets us back clean on that side. That would obviously decrease the income from LED side substantially and make us, so we're in a, probably a non-taxable situation for this year. So that's something that we can do fairly easy, get that cleaned up. As far as what I brought up in the prior board meeting back in April, right now, I know probably most of you are not familiar with the way tax works for a nonprofit, but typical items that are part of your purpose as a nonprofit are going to be non-taxable, right? They're just part of your everyday activity, and there is no doubt that you guys are trying to further the downtown development, right? So that building that you guys have easily, in my mind, fits in with that exempt purpose. And in addition to that, rent income is looked at as just an investment opportunity for a nonprofit organization. So if this was set up differently originally, we wouldn't be paying any tax on the net income of LED if there was no debt. Now, with there being debt on that building, we have to go through some hoops to back out some of the debt allocation versus the total asset value. But that still brings the taxable income for the Aiken Corp down substantially. I did the quick numbers on it. If we were able to do that for this year's tax return, what is roughly about a $35,000 tax liability would be down well under 10, just for the simple fact that the debt service is way down compared to that original book value of the asset. Now, unfortunately, and I've gone back, like I told you originally, I've gone back and done just tons of research on how in the world we can get this rectified going forward. What are our options? The S Corp entity itself is a entity where I have to take the net income coming out of that. Doesn't matter the flavor of income, could be interest, dividends, rent, anything coming from an S corporation has to be what's called that UBTI. It's unrelated business taxable income for Aiken Corp. There's no allocation I can do between that debt service, and so we're kind of stuck with it inside of that S Corp. We are stuck paying tax on that until something else happens. And so I said, from that point, if we go back and look at, all right, if we are able to dissolve the S Corp, pull it back out, I would still recommend setting up an LLC just for liability protection. It would be a wholly owned, disregarded entity for Aiken Corp. But we could get an appraisal done on the building, and even with debt on the building, the debt's not necessarily the big kicker. We can pull that out, liquidate LED, set it back up, push it into the LLC. We would have taxable income, and obviously I don't know what the building's worth, so I just picked a number. If we said the current valuation's $5 million, plus or minus, I have no idea, I'm not a real estate guy, but if we said that building was worth $5 million, the tax outlay in year one when we did that conversion would be about $250,000. But then you'd be saving, you know, $20 some odd thousand in perpetuity. So that would be a decision you guys would have to look at. And you know, even when the debt's gone on that S Corp, you're still looking at paying tax on it. So it's kind of just sitting there as long as you guys got. So, you know, if that's something you want to, you know, kind of take a look at, maybe get an appraisal done. Obviously, the lower we get it, the better for tax purposes. But we could go back out and pull that from there so you guys don't have this tax burden on something that we really could just exclude as exempt function income. So, you know, that's definitely an option, and I can easily run whatever numbers you guys want as far as, you know, current values and all that, just to sit them in there.
So did you say there would be, in doing that process, there'd be an initial big tax hit?
Correct.
But then you get the tax savings in perpetuity annually?
Absolutely.
And so it might take 5 years to recoup that initial tax hit?
Right.
Okay.
And so, right now, even if the debt stayed exactly where it is, the tax going forward would be under 10, and it would slowly creep down the more and more that note is paid off. The note goes away, we wouldn't have any taxable income from this activity at all going forward. So we could take, you know, $20,000, $30,000 in tax, pay, you know, $250,000 or so, and then the following year, you wouldn't have any tax liability whatsoever if the debt's gone. While the debt's still there, I would have to do the allocation between that debt service, and you'd have a, you know, small bit of tax that would go down every year. And it's all up front, so, I mean, obviously that would be a pretty decent hurdle to get over, but.
Does it would have no relative impact on any kind of local property taxes or anything like that. That's totally separate, right?
That is something that you guys would have to look at, because right now with it being inside of LED, you guys are paying property tax on it. And from what I understand on the property tax side, and I'm not an expert on that by any means, but I think that would be something you guys would have to work out as far as if you guys just somehow come up with a side way to pay property tax just so the city and
What
county
you're
are
saying,
still.
if this happens, it won't go on the books. It'll, we can do a pay in lieu of taxes. That's what you're saying?
Sure.
Well, I guess the first step is to find out what the value of the property is, right?
That would be my idea, because, you know, I threw out a number, I have no
Yeah.
idea.
There's no way the building's worth $5 million.
Right.
Cause you got an income of 20,500 times, that's 200 and some odd $1,000. The cap rate's right now, probably 7.5%, 8.5%. The building's not worth more than 2.5 to $3 million. Now,
That's good.
if you look at what it's on the tax books now, it's 2.8 million.
Mhm.
Well, we were trying to get the county to appraise it for cost. Remember that? It was 3.8 million was our cost. But they only appraised it for 2.8, which really, remember, this is a pass-through taxes for, the Momentum building is paying taxes, insurance, and so it's a net deal at 20,500 a month. So it's gonna be worth 2.5 to 3 million.
Okay.
Because you're gonna do it on an income approach.
Sure.
And the tax assessor accepts that.
I love this idea of saving on federal income taxes, but, you know, I harken back to, you know, one of the grand accomplishments of this project, and obviously one of the reasons we did it, is it is on the City of Aiken tax rolls, and it does generate income to the city.
County and school.
And the counties and the schools, and it's part of, you know, why I think the city's been such a good partner on this thing for so
The
long.
main thing
Yeah.
is we have to get Momentum to agree.
Oh,
that
absolutely.
They will pay
Yeah,
pass-through
absolutely.
for
Yeah.
taxes, because right now, it's in their lease that they pay full taxes, full insurance, they pay on utilities, it's a net lease.
Yeah,
Okay.
and that wouldn't, hopefully that wouldn't change. I'm just saying, you know, the federal income tax savings sounds terrific. I'm less concerned about saving on the local property taxes.
You know, I agree with you on that. Well, especially since it's passed through.
Exactly. That's the kind of the plan.
We can work that out if there would be remember this is, I think we got a 3-year extension on the lease right now, which means we got 2 more years on it. And we want them to stay there now, I mean, no question about that. So when we do the re-up, we'll just say there'll be a fee in lieu of taxes, which would be the same thing they've been paying, something like that. If we can do that, we gotta get them to agree to it, but I don't think they're paying it now, so shouldn't be any issue with that. So the lower the value, that helps us.
Yes.
Correct. Because ultimately, the way it looks for the IRS is, this is just an investment for Aiken Corp. And so you have to, in order to get anything out of a corporation, you have to have what's called a deemed sale. And so you have to, even if you're taking it home and you own 100% of it, but you're pulling it out of the corporation, you have to record a sale as of fair market value.
Okay.
And so that's the number we would use. You've got plenty of, I mean, it gets geeky tax, but you got plenty of basis. I don't foresee any sort of other issue we would have as far as pulling basically all of the debt, all of the assets from LED, we could pull back out, and, you know, just absorb into what would ultimately be an LLC that reports to Aiken Corp 100%.
Now, we can't get $5 million for it, I'm in favor of selling it. We'll just pay our taxes and go
Yeah.
what we're supposed to.
Everybody's happy.
That's right.
So suppose we really have to check the mechanics of a fee in lieu of taxes. Who approves that? What's that process? We can't just decide that we want it. Somebody has to approve that.
That's county.
It might start at the county, right? And so I think that would be another step. If we got to have an appraisal, but somebody else needs to be doing the research on
I'll have
how do you do this
conversation.
fee in lieu.
Sounds good, we just start with
Actually,
the
good,
appraisal and we
Jason.
can go from there.
A good person for help with that would be, Will Williams, for, just for
Yeah.
overall sort of game planning.
Yep. Yeah, I'll take that all in a row with it.
There's how many years left on the lease?
About 2.5 years.
Extended 2 or 3.
2.5.
So I guess the only thing I would see, if you had all that information, you'd still have to renegotiate with the tenant. If you're bringing them new terms during the term of their original lease, that's gonna be tricky.
Well,
I don't, no, I don't think we're changing the
You're
terms.
not
No.
changing the number, okay.
No.
I would,
we've never changed the number on them, so
Yeah.
if anything, it needs to go up.
Yeah.
'Cause I don't wanna run them out either.
Yeah,
I would imagine that they would accept the deed in lieu if we did it the other way, they don't get any taxes. I
They
have
wanna
a
be
feeling
friendly.
they probably
Yeah.
yeah.
would approve it, whoever approves it would probably do that.
We just need to get it
We just
right
make sure.
and get the mechanics exactly,
Exactly.
steps right.
Well, the other side of it is, if we'd have known this early on in the process, we'd have saved about $30,000 a year.
Per year.
In federal income taxes.
Yep.
Think about that, over 22 years.
when we set this up, we got legal and tax advice that this is the way we had to do it.
That's right.
So, we did what we were told.
Yeah.
Well, then I would entertain a
That's why we had
motion
to
to
CPA.
have the property appraised. And then that's all we really need to do at this point until we go forward.
Now, you take bids on that, or do you, how does that work?
I mean, from a bank standpoint, I would suggest putting it out there to several to see what their
2 or
fees
3
would be.
okay.
Yeah, I can give you a
I'd-
list of commercial appraisers that I work with that we have to provide as a concierge service anyway, so,
Do it.
and they'll bid it out just like they do for
Somebody
some.
looks over your
And
shoulder.
I would also specify that they don't do a desktop.
No, sir.
Okay.
They don't do what we call a desktop appraisal.
Third party.
No, you gotta get this, it's
Income
gonna be a,
approach.
Yeah.
gotta be a problem.
In other words, they have to actually come and see the building as opposed to getting
Oh,
the
right,
cheapest guy that's sitting in Columbia that's never been to Aiken to do the appraisal.
No,
Sorry,
that's-
said that out loud.
we know who to get as
We know,
far as,
yeah.
you know.
Okay, somebody wanna make that motion, then we take bids and then, decide on it. Is there a second?
Second.
And that's take bids and then the executive
Bids
committee
and then
make the decision.
Executive consider making a decision as to which one to pick and go ahead with the appraisal, so we don't have to keep voting on this. That agreeable?
Yep.
All in favor say aye.
Any further questions for Joel? Oh, I know he's probably tired of
Any
getting
other minutes, thoughts?
Buzz, I was just wondering if we could ask for, sort of a definition of the relationship fiscally between Aiken Corp and the city. I know that question's come up, and it would be nice if Joel, for my purposes, and I think others, the questions were raised at city council, where there was a little bit of like, who are we fiscally in relation to the city? Do you know what I mean? Like what we are as far as a nonprofit, like,
We're a nonprofit economic development arm.
yeah, but having a basic understanding, just like a little blurb that maybe we can include on the website is, cause it's one thing to say that to people, I know, I'm not an accountant, I don't speak that language, so what does that mean in layman's terms? I just didn't know if that, and I'm not talking about an essay,
Sure.
something that, pretend I'm in 8th grade and you're explaining it to me for the first time, like, what does that
Oh,
mean?
definitely do that. I'd have to read the agreements between you, and I could definitely boil it down to a
Okay.
boilerplate for sure, that's
That's a
easy.
question that we get a lot.
Well, in our mission statement, it should, when we first set this thing up, we were the economic development arm of the city to do economic development, housing, and then also there's some things about giving money to
Yeah.
the, that's in our mission statement, right? Should
Yes,
be.
it's on our webpage, so I mean, the way that it truly was set up was, we were an economic development corporation established as a nonprofit and liaisons with the city of Aiken. I mean, that's what our mission was.
Independent, but
But I think it did need a little bit of
Associated.
clarity on the website, didn't it?
Well, I'll give you an update on that website here in a little bit. I like numbers much more than I like putting together sentences on
Yeah.
websites, so,
That's why I
I'm
just thought
slowly
if we
going
kind of
through
had
that.
an official,
Sure,
I thought that would be helpful to those.
yeah, absolutely.
I'll get with Joel and get him what he needs to kind of put where it makes it easy for everybody.
Yeah,
Karen, a couple of factoids that I found when you posed that question. I just did a quick search, and There are more than 260 community development corporations in the state of South Carolina that are similarly situated to the Aiken Corporation, community development corporations, and there are 4,500 in the United States. So all doing same thing.
Similar things. And so I think those are interesting points to note, because when we're having casual conversations or just in passing, I know that I personally would like to have the language to speak to that. I mean, that's really important. This is not, we're not in a vacuum.
Well, I think it's important it would have been good for the city council to have said, well, we had 2 voting members on the Aiken Corporation for about 20 years, 21 years. It was just recently that the 2 that were assigned had to resign because of the way that it was, as far as everything that was going forward. So
Yeah.
21 years, we had 2 voting members, city council in this room with us.
Yeah.
So I think that's a pretty good indication that we're working for the city good as far as economic development, housing, and our mission.
Yeah, I think it would be good moving forward, since we just had an election yesterday too. Obviously, there's people that have been doing it for years, and to have the language so that when someone's asked on the dais, like, what is your relationship, that it's not just that we're a cousin, and that we're
Totally, that was
Something-
not.
just something a little more, yeah.
Well, there's no question that
Well, we're independent of the city,
Correct.
Yes.
and
So
that,
it's a
that,
public-private
that,
partnership.
that line needs to be very clear in those casual conversations. We're independent of the city. You can say whatever beyond that, but that's the first step.
our mission statement, I believe, is important, and that's.
I agree.
All of us need to know exactly what our mission statement is and be able, one question on the financial statements on the, Aiken Corporation, the, loan receivable LED of Aiken of $137,009, is that part of that, what you're talking about as far as the loan that was made? Exactly what is $137,913?
That's a little bit misleading, because the equal and opposite credit is inside of the investment asset, because they, basically what that account is to pass money between Aiken Corp and LED, because typically what LED does is take their cash flow, push it back across to Aiken Corp, which ultimately has to pay the tax on the income. So that's just a pass-through account for various items that are due to, due from.
All right,
Any other questions for Joel? Joel, you're welcome to stay. Thank you for your assistance.
If you need help with sleeping.
This is the second time Joel's been here to the board, to present financials, and as long as I've been on the board, we never had our prior CPA come up, so I think it's vital for all of us and the public to have, knowledge of the financials, and, he's been cleaning up a lot of things that weren't done correctly, so appreciate all your hard work.
Absolutely.
Bill, you're not planning to leave the area, are you? When you give us this ruling, so, I don't know where our accountant was from 21 years ago, but I wanna make sure you don't hang around here and make sure.
I was born here, all my family's here, I don't feel like I'm leaving anytime soon.
Good.
The only other thing is, do you want me to stay in case you guys?
Yeah, it
talk
may be
about-
so, yeah.
And stay because of what?
In case any other conversation.